All right. We're back for another Friday Financial Wrap-Up with Mr. Michael Zuber. How are you, brother?
Man, I'm doing well. We had to scramble a little bit this morning. You're on the road. My network is down, so I had to go to a friend, Jody and Dave, to let me use their studio. So thanks, Joe, for letting us make this happen this morning.
Joe DeRaffaele in Las Vegas, folks. He's the man. Thank you, Joe. This show is for June the 27th, 2025. Let's get right into it. Good news, bad news in the housing market. What's going on, Michael?
Yeah, so as you know, Ty, I've been calling for 2025 to be the last hard year for real estate. And again, just to be clear, like I always try to be, I am referring to transactions, right? We have been on this 4-year decline of transactions. And I still feel that 2025 in total will be the last hard year. So, but I have a kind of caveat to that. I now see, after talking with Lance Lambert from Resi Club, that video will be out later in the week, that July and August will be the last 2 hard months of this hard 4-year period. What I mean by that is existing home sales will once again be below last year in July and again in August. However, things will turn around in September. September will be the first month where we have year-on-year sales growth. So it will be the beginning, the slow but important beginning of working ourselves out of this transaction depression, ultimately leading to momentum. And as I've said before, 2026 being better than 2025. I want to be clear why I think that. I think there's a couple of things. I think the consumer, as I've shared for years now, can typically act scared for about 6 months, and then they move on and do what they do. Second, it is very clear that the Fed at the latest is going to be cutting in September, if not July. And we will finally get rid of some of this uncertainty, trade deals, World War III, all of this. So we will be in a net better position as an economy. The consumer will feel better. But if we step back to the last piece, and this piece is important, the last piece of this is by September, we are going to figure out who wants to sell and who needs to sell. What do I mean by that? You can watch all the real estate, beanie boppers, and they will tell you inventory is up 20, 30, 40%. However, what they fail to tell you is all listings aren't equal. And I believe inside those numbers are buried 20% of wish pricing. Basically, give me my 22 price or I'm not selling.
Yep.
So by September, we will have 10% less listings because they will be canceled or pulled. But more importantly, we will finally have sellers, after being beat up for months and months and months, cry uncle. If they need to sell and they want to move on with their life, come September, they will be far more open to negotiating. So again, July and August are going to suck. They're going to be worse than last year, in my opinion. But the good news is you're almost there, right? In the beginning of the year, I'm like, one more year. Now I'm telling you it's 2 more months. Yeah. Now, if we close on this topic and talk about investors, I can only tell you what I'm doing. What I'm doing is I'm being super aggressive July and August. I want to get in ahead of the rush. Yep. Because when we get to September, and if it goes the way I think it will, transactions are going to go up, competition is going to go up, and the mainstream media will be once again behind, but it will be a self-fulfilling loop where the fall is, above trend. So that's kind of my good news, bad news, right? A lot of people are in the real estate game. Real estate makes up 12% of our GDP. Real estate has been negative on GDP for 4 years, certainly 3.5 years. But I think come September, transactions will start to print year-over-year growth. Now, people are probably listening to this going, what about price? My forecast on price hasn't changed. It's going to be flat. We got, all the appreciation in the first couple of years. You're going to see more transactions take discounts, but those are going to be on properties above the median. So again, the median is going to be relatively flat and probably stubbornly so. So a lot of the crash bros who were talking 5%, 9%, 15%, 20% crash, in the next year, 12 months, 6 months. They're just wrong. They've been wrong forever. They don't understand price elasticity. They don't understand real estate. They're just doing it, for clicks. So, yeah, I'm pretty excited about this good news, bad news story because again, it's almost over.
I would completely agree. And again, I would say also too, I feel like with all the headlines, sellers have now gone from this overly confident position. We're seeing sellers in the market that have now become reasonable. They understand that pricing matters. They understand that condition as it relates to price matters. So I think, again, lots of opportunities. I love what you said for the next couple of months to really, really take advantage of where we're at in the market with inventory, the imbalance, the fear. I think, again, a great opportunity for investors and buyers for sure. And even sellers who want to realize their gains and just take their chips while they can, right?
Absolutely. Again, it's a, real estate is always a two-sided transaction, seller and a buyer. And, again, people are holding out, trying to sell over the summer. And come September, they're either going to take it off the market or they're going to deal.
Yeah.
So I feel pretty good about this September call.
I do too. I see everything you're saying. I can see it just manifesting in the market day to day. And so it makes a lot of sense. Let's keep going. So let's talk about the school community. School Speaks upcoming offer from the financial firefighter. What's that all about? Who is the financial firefighter for those that don't know?
Yeah, so we'll get to that one sec. So again, one of the things I will be doing inside school is going live every Sunday that I'm not traveling with Olivia. So last Sunday, we were at the Four Seasons in Hawaii, chilling out, having some fun. So we didn't do a show. But to that end, I want to always do more than expected. So at 8 o'clock this morning, so in 23 minutes, we've got the one and only Thatch Nguyen coming on to the school community. And, he's going to be sharing what he's got going on. We're going to be able to, school students to be able to ask him questions, which, is a true honor having him as a friend and having him give us an hour inside the school community. So Thatch Nguyen's coming this Friday, 23 minutes. After that, we got Jason Pritchard this Sunday at 8 o'clock. He's going to come in. We may go for an hour, may go for 90 minutes. The following week, we've got Derek, the ADU guy, coming in. Derek, the ADU guy, people talking about ADUs. And then the following week, I'm trying to line up an accountant that the lumberjack and I use, Bob Langworthy from Maine Bean Counter. So we've got 4 upcoming live sessions where the best of the best are going to be interacting with our community. So that's the speakers. Now let's talk about the financial firefighter. The financial firefighter was at the event at the Four Seasons. Shout out him and Mikey for being there, giving support. It was really nice of them to go to an event I was simply speaking at. We had a nice dinner and all of that after, and he actually came to me and he said he wanted to help grow the community. And what he basically offered is he wants to refund the first month for 20 people, right? 20 new people. All you have to do is subscribe to his channel, Financial Firefighter. Tag him on Instagram, Financial Firefighter. He will verify with me that you're a new student, and he will Venmo you or Zelle or whatever it is, $20. So now you've got the next 20 people that sign up could do it for free. Take advantage of all these great speakers coming, all the education, see what we're all about, like it or not like it. No skin off our backs. But that was really nice of Mark, the financial firefighter, to do that. And I mean, that's like $400, right?
Yeah.
20 times 20. So good. I was really honored that he wanted to do that. So subscribe to his channel, sign up for school, get $20 back, enjoy the first month for free.
I love that. That is creative. That is smart. I think that is a win-win-win. I love that guy. He's always such a great participant in the community, folks. You definitely want to get involved in the school community, number one. I can't believe you got Thatch, Jason Pritchard. Man, you talk about Mount Rushmore, man. I love what you're doing. And then on top of it, the cool offer from the financial firefighter. I'm going to come up with an offer too. So this is great. I love it. I love it. I could see the other experts, the other millionaire panels. I could see people doing cool stuff like this. Let's keep going. Let's talk about existing home sales. What did you see? What are your thoughts?
So existing home sales, again, this is all going to be part of the story of us finishing out a horrible year. Again, remember, June, July, August will all be bad months. And, this May was no different. It wasn't as bad as expected. It was expected to come in below 4 million at 3.95, came in at 4.03. It's still, we've been in this 3-year run of 4 million existing home sales. Another month, of 4 million, just a tick above. But the story's the same. Real estate's still in a depression, recession on a transaction basis, and it doesn't get better till September. So, you can look at that as glass half full or glass half empty. I'm looking at it as exciting for the real estate industry because I know you guys have been hurting for 4 years or 3.5 years. It will get better. And as an investor, I'm like, the signs are clear. Get aggressive in July and August, or you might miss out. So that's what I'm doing.
Lots of opportunity. It's not whether it's good or bad. It's where's the opportunity for you. That's what does it mean for you? So well said, Michael. Let's talk about new home sales. What did you see this month?
New home sales was a disaster. It was down like 13% month on month. It came in at 623, was expected to be basically 700. Last month was 722. We're seeing folks like KB Homes and Lennar take massive discounts to kind of buy down rates and do all of those things. New home sales, they're just going to simply slow down. They have a lot of inventory. They're not going to be building as much. They got inventory to blow through. And you can look for supply of new homes to greatly reduce because they're clearly not selling or selling at the margins they want. So, home builders don't do this for free. So they're going to start slowing down is my guess.
Home builders slow down. Very interesting. So if we look at that, let me follow up question on that specifically. If we see home builders slow down a little bit, we also see inventory maybe shift in September, people pull their homes. How do you see that playing out if we say from fourth quarter into the first quarter? Are we going to have tight inventory? Do you believe it's going to be, again, I know I'm crystal ball here, I'm putting you on it, but fourth quarter of this year, first quarter, do we see again flat? Do we see inventory like existing home sales maybe pick up, or what do you see with home builders slowing down?
So I really do, because again, when you're a home builder and you break ground, you're kind of committed to that phase. Okay. So I suspect they're going to be slowing down now into Q4, which will mean inventory for completed new construction homes is less. It's less in February than it is in June. Completed inventory. I think completed inventory I read somewhere is like 9 months, almost 10. It will be something less than that come February.
Okay. We will keep our eye on it, folks. You can depend on Michael for your best source of real estate news. Let's keep going. Let's talk about pending home sales. What happened? What is your take on it?
Existing home sales, again, or on pending home sales, we're up slightly, 1.8% month on month. But pending home sales, you got to take with a big grain of salt. It didn't report what last month was, but if we go back several months, we're seeing pretty significant cancellations. Just because something goes pending doesn't mean it's done, right? Doesn't mean it's closed. So pending home sales being up a little bit, probably not a lot to write home about because, again, I think it will lead to an existing home sales that disappoints next month to kind of continue on trend. But yeah, pending home sales being up that little in an environment where so many are canceling, nothing to write home about.
Okay. Very interesting. We will, of course, keep a watchful eye on that as well. PCE, what is it? What happened? What's your take on PCE?
So PCE is the third of 3 inflation readings, CPI, PPI, and now PCE. PCE is important because the Fed has told us repeatedly it's the one that they look at the most, specifically PCE core is what they look at. So we got PCE readings this morning. Headline was 2.3. It was expected to be 2.3. Last month, folks, it was 2.1. So inflation is up. Now, for the more important reading, core was expected to be 2.6. Last month, it was 2.5, came in at 2.7. So again, inflation is up. And again, Jerome Powell has told us repeatedly that he is afraid that inflation will pick up because of tariffs and that the next couple of months, basically the summer, are going to be a threat of inflation 2.0, which is why he's not cutting. why the Fed's not cutting, because he fears inflation coming back because of tariffs and the like. So at least with this reading, inflation is up headline and inflation is up core. Not a good reading if you want an inflation to go down.
And again, if you talk about the 2%, really what they're moving, they want to be moving toward 2% as a long-term average. Explain that just a little bit?
Yeah, it's really funny. It's often been quoted that the Fed wants this 2% target. We spent years and years, if not decades, below that. 2% is no magic number. It was actually first postulated by a New Zealand economist, of all things. And the Fed has just kind of stuck to that. But again, as long as the Fed remains clear and anchored to this goal of 2%, anything that takes it above that, certainly month on month, going from 2.1 to 2.3 or 2.5 to 2.7, is going the wrong direction. I just think we look for directional information as opposed to 2%. Because again, they're talking about 2% average inflation. And again, well, what does average mean? I don't know. You have to tell me the duration. Is it an 8-month average? Is it an 8-year average? So again, there's a lot of piecing in parts of inflation. But at this point, just watch the direction. And, the direction went the wrong way.
So here's the big question, Michael. That was very well explained too. Thank you for the 2% explanation. So are we going to get a rate cut in July, September? It just seems as though Wall Street, the stock market, everybody's just begging, and they're going to replace the Fed and all of the stuff that's going on with the Fed. Are we going to see a rate cut in July? What is your take on a rate cut? Will it happen? When will it happen?
Yeah, so I want to do a couple of things here. First, I am not changing my opinion from earlier in the year just because I want to hold to that. And again, that was no cuts in 2025. So if they cut in July or September, I will just flat out say I was wrong, right? I'm not going to change my opinion now. That's kind of, it doesn't feel like the right thing to do. But when you ask me specifically, I think the chances of a July rate cut are 0. But I think the chances of a September rate cut, they could be 50%. Right. I think there's a lot of things lining up. Continuing claims are at a 3-year peak, 1.997. I think the numbers inside PCE this morning for incomes and consumption were much weaker than expected. I do think you have more and more people like Fed President Christopher Waller, Fed President Michelle Bowman actively talking about a July rate cut. And, you've got other Fed presidents basically coming out saying too soon, wait till September. It certainly feels like to me the Fed wants to cut in September. I just don't know if the data will allow them to, because it's very possible that July and August inflation numbers are ugly. And perhaps the job market, while weakening, is not ugly. The last thing I'll say is the Fed has been very clear the last 48 hours and everything I've read that if the job market breaks badly, they will be cutting. Inflation be damned. Which is net new information, because before it was always, hey, what's more important, inflation or jobs? I think the Fed's been very clear the last 48 hours that if the job market breaks, they will be cutting in a big way. But yeah, so July, I think 0. September, it could be as high as 50%. I think the Fed wants to cut.
Interesting. Yeah, there's so much pressure, man. It's just like anytime I turn on CNBC or read any headlines, man, it's like everybody's like, what? They're begging for the rate cut. Very interesting. Let's talk about the shadow Fed. What is it? What's going on?
Yeah, this is something I postulated probably a month ago that I actually see happening. And now the Wall Street Journal is talking about it. So I think somebody there is watching this channel.
You've been talking about it for months and months, and you even down. How does the Trump administration, how does this all play out? You've been talking about it for months.
Yeah. Yeah, so I think what's going to happen is Trump's going to nominate somebody like Warsh or Bennett or Waller or someone. And now this person's going to have absolutely 0 power. 0. However, this individual is going to be paraded around on every financial network every single day questioning the Fed. And that's not going to be a comfortable position. The question is, will Powell resign? And I think at this point, I don't know that he resigns, but it's clearly going to be uncomfortable. The problem is, will this shadow Fed that will be nominated? Let's be clear. The only person that Trump's going to nominate is somebody without a backbone. They're going to want to be somebody that gives Trump whatever he wants. He's going to be a yes man. And I am not convinced that the bond market's going to like that very much. There is a very, very good chance that the front end, the 0 to 2 years rates go down, but the 10-year goes up, a la 100 basis point cut, and rates are up 100 basis points. So it is no guarantee that Trump wants lower 10-year rate. He said it explicitly. Besson has said it. Lutnick has said it. However, this game may give them the opposite of what they're hoping for. Dangerous.
We're going to keep our seat. Literally, I'm going to keep look, Michael, I'm going to keep my seatbelt on. Literally, I'm keeping my seatbelt on for this. Talk about the 10-year real quick, because bombs were being dropped. I texted you over the weekend last week and said, hey, what do you think is going to happen? You said, yeah, the 10-year bond market will probably soften up. We'll see rates come down a bit. I noticed even yesterday they were bouncing close, like 4.2. I didn't see what the 10-year was doing today. I didn't look at it this morning. But how do you see, just even in the short term, the next 30 days, what do you think is going to happen with the 10-year? Do we just kind of bounce around somewhere in the low fours, or what happens next with the 30-year mortgage?
Yeah, so the 10-year note is certainly down this week when you look Monday through Friday. Right today, it's up a little bit. It's at 4.28. I think probably because the PCE reading was worse than expected. But basically, because of all this talk, there's been a uptick in number of rate cuts. It went from 2 to 3. Morgan Stanley's talking about 7 over the next year and a half. So, I mean, there are people lining up for lots of rate cuts coming. But I think it kind of stays where it's at until uncertainty clears. And again, there's talk that there could be 10 trade deals, including China, over the next 7 to 10 days. That's huge, right? We've got to get these uncertainty things behind us. It certainly seems like Israel and Iran peace is holding, or ceasefire is holding. At least it appears that way. It appears that the big, beautiful bill, or a version of that, will come out eventually. So we're about to tick off a lot of scary uncertainty and be in a better place. And if we are, and the job market doesn't break and inflation doesn't go wonky, you could see the 10-year down at 4% probably in the next. I mean, if everything went right, you could have a 4% 10-year in 6 weeks, 8 weeks.
Which would put rates, 30-year mortgages, that would put us at a
6.25, 6.3, something like that.
Okay. Very interesting to pay attention to. But also too, I want to just comment on one last thing because we're going to wrap up. If the Fed cuts rates by a quarter point or even 50 basis points, we've seen in the past, the last rate cut, 30-year mortgage went up because the bond market didn't like it. Or just talk about that and just explain so the viewer really understands it's not apples to apples, it's apples and oranges. It's very different. Explain that briefly.
Yeah, I think there's a lot of people who hear rate cut and assume that it's a 1-to-1 ratio, right? A lot of people I know call mortgage brokers. The Fed cut rates by a quarter, means my mortgage rate goes down a quarter, right? There's absolutely no 1-to-1 direction. The Fed controls what is called the overnight rate, which is what banks use to borrow from banks. It's literally the shortest term loan you can get. It's overnight. But from that, it is the basis where the short end, 0 to 2 years, is calculated. But then you get into longer term duration, 10 years, 30 years. And those are market forces. Yes, the Fed rate can have some influence, but it's basically the 10-year note is looked at as the risk-free adjusted return. And in an environment where the bond market doesn't like the cut, rates can go up. See what happened last year when the Fed cut 50 basis points before the election. The bond market didn't like that and rates went up. So please don't think rate cut equals lower mortgages. It's by no means guaranteed. But yeah, it's people miss that a lot.
Folks, pay attention. Michael, thank you for all the work you do. Folks, get involved with the school community. You can literally go to school, SKOOL, Google it, school community, get involved. Thatch to Win today. He's literally 5 minutes. You can be on live with Michael, with Thatch, and ask Thatch to Win Michael questions live. Financial Firefighter, he's going to sponsor the first 20 of you that follow the enrollment process. Michael, thank you for all that you do. Have a great weekend.
Thanks, buddy. Thanks for pulling over to do this. I appreciate you. Take care.
You're the man.